This region around the Great Lakes has been called a heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Well, hello, good morning, and welcome, everyone. It is Monday, January 26th, and this is the AgYield War Room. I, of course, am AgYield's marketing manager, everyone's favorite backup host, and the proud owner of a Mazda CX-5 with the vanity plates, the soybean boy, Jack Coakley. If you got any questions or comments, please feel free to drop them anywhere you see fit, and we're always answering your questions and comments at info@agyield.com. For overnight numbers, let's go to someone overly handsome. Brian, what do you got?
Thanks, Jack. Decent overnight volume last night. March corn down 2.5 at 428. March beans down just 3/4 at 1067, and March Chicago wheat down a penny at 528.5. Metals continue. Silver up 8% overnight. Gold up over 1.5. So we'll see how that plays out. And the dollar is weaker. So we'll see if that continues to aid commodity pricing.
Sounds good to me, Brian. Thanks for that. Ben, metals are hot, grains are ice cold. What's going on in your brain?
I think first and foremost, you have to identify that there is a fundamental disconnect between the two markets, which would explain why there's been a reluctance for managed money to get long grains. I think that if we gave them a reason, they would pour in. And as of right now, they don't have a reason. As far as corn goes, going back to Friday, I think you treat rallies as back and fill action until you get something more tangible. For me, that would be strong close above 45.46. This morning we're 17 cents away from there. So I feel like back and fill the norm. Seasonally, Jason mentioned we have a tendency to try to rise into this period. Hope that's the case. To give people a little better opportunity before we head over into that second half of February, which we've beaten over and over and over again. So market will be looking for continued sales. We missed expectations on export sales by a lot last week. And I think that, we should hold some sort of value into Thursday to see if there's some more widespread quiet buying. The rules are they have to announce anything over 100,000 tons, but there was an awful lot of purchases that were made less than 100,000 tons. So, all in all, corn following the report day has hung in there pretty well. And it's kind of hard to say when you have a down 25-cent repricing event. But other than the day after the report making some new lows, it's been up 5 of the last 7 days. And I expect a choppy trade within, I don't see any reason why we're going to take out lows, although, government shutdown is potentially looming again. And watching social media over the weekend, some people were trying to connect dots that, well, last time the government was shut down, we rallied. Well, we're working with a whole different set of data right now following the January 12th report. So I'm not willing to make any strong correlations between government shutdown and grain strength. Soybeans keep fighting with the 200-day moving average. At one point last night, they looked really good. They're full 8-9 cents above that. And this morning, they're back below it. So we'll see what the day traders want to do, where the bigger players are at. But there's no denying that in the good assets, and when I say the good assets, particularly you're talking about metals, even crude oil's had a pretty decent little bounce. There's probably a proclivity as so much uncertainty builds, the dollar's getting crushed, that maybe physical assets might start to be to have continued appeal. So we'll see. Like I said, though, grains are not. They haven't really given that contingent a big reason to be long yet, and we're looking down the barrel of South American bean harvest. So
Thanks for that, Ben. Jason, anything to add there? What's going on in your mind?
No, kind of agree with Ben. Not a lot of fresh news to go off of. Over the weekend, obviously a lot of political tension going on with this ice shooting in Minneapolis, and the odds of a government shutdown spike dramatically. So that's something we might have to be dealing with for the next few weeks. We have the USDA report, I think, on the 11th of February. So we'll see if that happens. I see the risk of some of these bridge payments, might be in question. Outside metals obviously are hot. You look at our markets and look at South American weather, right? The GFS model and the European models have above normal precip, below normal temp, so kind of perfect weather forecasted over the next couple of weeks. So nothing to really go off of there. Maybe beans have been on a good rally here. We're on a 40-cent rally in March beans at that 200-day, and strong overnight, but it kind of looks like it's failing. I imagine some of that's weather. I think to get beans really excited, you kind of need a South American weather problem. It doesn't look like that's an issue right now. And we're, and that's what the markets do. They trade the right now, right? And it's still early. I mean, you could still have problems, but there's just no threat from a weather issue. No flash sales this morning, obviously, way above expectations for last week. I was kind of wondering if that wasn't some front loading going into this, this polar vortex, or whatever you want to call it, this extreme cold weather. So I'm kind of concerned that maybe sales fall off quite a bit for this week. So that might be some of the weakness starting this week. That's all I'm seeing, kind of, looking for headlines. Obviously, first notice day is still on the top of our mind. That's, 5-6 weeks away, but kind of want to see how that trades over the next 5 or 6 weeks. So, our concern would be, obviously, and we've stated this on this program multiple times, of weakness and basis contracts and pricing later contracts. A lot of those bushels that need to be priced or rolled by that time frame. So still, I think if you have needs going into that time frame, I think you gotta figure that out now. So protect price or make those sales, and look for a strategy longer term to if you want to be in the game. So go ahead, Ben.
I was going to say too, a lot of times it's not uncommon to see bigger players put on spreads in the commodity markets. And, the worst case for grains is that they become the short leg of every other trade. But ultimately, I think that with global corn stocks, that could backfire on people that are writing grains off in general. It's going to take time. It's going to be one of those things that if it were to materialize, that it will just be continued weeks of really good sales. And then everybody looks around and goes, we're going to look at a WASI next month and they're going to have to do XYZ. Maybe we need to adjust this, but it's going to have to be consistent. It's going to have to be large. And then potentially you see a reaction to it. So, it's going to be, I think, a slow, choppy trade, and certainly concerned about the last half of February.
Yeah, thanks for that. Brian, you got anything on your end?
No, I was just going to ask Ben a question, actually, with this bridge payment, maybe now in flux with the government shutting down, but if they do receive that payment, do you think that just kind of takes away that max pain of first notice day off the March in February, where they would actually end up rolling it, since they do have this payment, where you can actually push that pain down the road?
I think that'll be a mix of how people handle it. Going from Dece to March, waiting for that January number, and with the mindset most people had that they had to bring yield down, which they didn't. You no longer have that justification, in my mind, to say this is the risk that's worth taking. There's also a period there where the farmer has to generate a lot of cash. And in theory, they are digging a deeper hole by rolling. And, March to May, 7.5 cents, maybe it's worth it. And I think the bigger question is, if the bridge payments are not in play because of government shutdown, how much more money does the farmer have to generate for, March 1st, land rents, operating notes, inputs, the list goes on. So I think that, when you take the bridge payment out and then losing, whether it's 20 to 40% of not getting your money because you haven't priced it on a basis contract, I think it'll ultimately come down to how much money do I have to get. And those are, just like a lot of things we've seen this year, that's a variable that we don't know right now. So I think there's enough basis contracts out there that the percentage of selling, that whoever that, whether it's 50% or 60% or 30% to try to price it, I think the trade will line up for that.
Great stuff, guys. Thank you for that. Yeah, at this point, like maybe I went into the wrong profession. Like if Congress gets to shut down like twice every 12 months, I mean, that's like a teacher's schedule almost, It's like maybe I'm running. So
yeah, and they still get paid too.
And they get paid. Well, it's a good life,
Yeah, and then you got the daycare on the side.
Yeah,
yeah, right.
Daycare going, and then
right.
I go, oh, I wish it was open. Oh, it's hard. Anyway, Ryland, let's talk about livestock, man. What do you got?
Yeah, no, it was kind of a wild wild Friday for the cattle market overall. I mean, we did see cash ramp up kind of late there, just right ahead of the report, and seeing like 234, 235, so starting to creep up there about 1 to 3 higher. Even the high side went right around 236, so just looked like packers really came after it to get it done before they saw the numbers. And to be honest, it looked a little bit on the neutral side to on the on-feed report. On-feed 97, placements 95, marketing's 102. So that placement number was about 2% above the average guess. So you can make the case you could see some kind of negative reaction to that, but I thought more interesting was probably the number of heifers and calves in feedlots, down about 3%. So although not a smoking gun for heifer retention, there could be impacts from the border influencing that number as well. But I think it does kind of go to show that there could be perhaps some kind of heifer retention here. So we'll see. I think we'll know more after the January 29th report. Obviously kind of creates a little bit more caution this week on the producer side. So I wouldn't necessarily hesitate on any kind of strength this week. Really start to look at margins in the back end of the market just in case we do see for some reason, any kind of meaningful setback here. I mean, there's a lot of headline threat and headline risk, I think, right now going into this week and maybe even the next couple weeks. So overall, just want to make sure we're looking at that. So on the hog side of things, pretty mixed to finish. I mean, it still feels a little bit overbought to me. You have the cold storage report coming out, generally kind of neutral, in my opinion, just kind of up 5% from last month, but still frozen supplies of pork were down 2% from last year. So it wasn't really that big, I'd say on the movement side, pretty standard, overall, just it's moving in the right direction. But, bellies were up pretty considerably from last month, maybe a little bit more than expected. So I think you got maybe a little bit neutral to negative vibe coming into the day just from that overall. But cash markets still firm up 47, bellies up $1.55. So, seasonally, this market should still kind of trending higher. Just feels like we're really kind of making the push here a little bit more aggressively than one would expect. So that's why I say I think there should be a little bit of caution, but overall the news is still really good coming into the day.
Thanks for that, Ryland. If you love this show, man, are you going to love the War Room Report. It is Monday to Friday, every day the markets are open, straight to your inbox, insights into corn, wheat, soybeans, livestock, weather, USDA reports. It is, a more advanced conversation than, maybe the stuff we can fit into a 15-minute show here. So be sure to check that out. Link in the description below. But we want to thank everyone who tunes in on a daily basis. So give us a like or subscribe. Helps us out, get the show out to a larger audience, and it doesn't cost you a dime. So thanks to everyone who continues to support the show. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Dan will be back tomorrow, and I will return to my my Smalley daycare. It's always a pleasure to hang out with you guys, and we'll talk to you tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.